Welcome back to the Old Fashioned Real Estate Show. That's Brian
Leverage.
And this
Jeffrey Holst.
Exactly correct, Brian. And we have a fascinating topic for the day.
Right after this.
Well, maybe we should tell them what the topic is first.
No, it's a better teaser.
No, it's actually better if they know what the topic is. I'm quite certain of it. What we're going to talk about today is what, Brian?
Landlording?
That's sort of right. What we're going to talk about today, Brian, is...
Landlording.
That's close enough.
Still right.
We'll be right back.
Welcome to the Old Fashioned Real Estate Show, where hosts Brian Leverage and Jeffrey Holst for our old fashioned real estate advice.
And we're back.
So, the topic for today is...
What kind of landlord do you want to be?
Close enough.
Yeah?
Yeah, so the thing is, this is actually not a facetious question. Like, there are a lot of different strategies towards landlording, and we're going to talk specifically about residential landlording today. And what prompted this is Brian and I have bought a couple of buildings in the last several months where the properties have been less than desirable.
That's apt.
Yeah, no, we've also bought some that have been very nice. So if you're one of the sellers, we're not necessarily talking about you, just to be clear.
No.
Anyway, so the point is, sometimes people keep their rents low and they think they're doing their tenants a favor, but by keeping their rents low, they maybe have less money to reinvest in the property. Now, I'm not talking about slumlords here, which you definitely do not want to be a slumlord. Slumlords are people that buy cheap properties and let them run into the ground and just try to soak as much money as they can out of it. And that's definitely not what I think any of our audience is looking to do.
Well, we hope not.
And if you are, you're watching the wrong show.
Good. I'm glad you said it.
Yeah.
So
we just lost 3 listeners out of our millions of listeners,
Yes.
Brian. So
Yes.
we're going to survive.
I think where it comes down to is a lot of investors, landlords, etc., because some are not always real estate investors as much as they become maybe accidental landlords, etc. So we'll get that out of the way right from the beginning. But that being said, a lot of times people build an emotional connection with their renters, etc., and they don't want to go up on the rent because they have some sort of personal connection, all that,
This is a serious danger with self-managing.
Yeah.
I've self-managed a few of my properties.
I know.
And then I turned them over to your property management company because I had that exact issue. I had tenants there that, frankly, I should not have allowed to stay, that were taking advantage of me, destroying my property, and I wasn't able to get rid of them because I was like, they're going through a hard time. Their wife's sick, their kid's sick, whatever it might be.
Maybe a divorce, who knows?
Yeah, all sorts of things going on in their life, and being a person and being emotionally attached to the people and thinking, hey, they're just going through a hard time. You can certainly sympathize with that. And there's, by the way, just to put it out there,
doesn't make it bad or wrong.
There's nothing wrong with helping someone out, but when you're running your real estate like a business, it's also important to recognize that sometimes people who can't pay rent are just simply not the right tenants for you. And in this case, these people weren't paying very much rent and their property wasn't in great shape, and I wanted to get in and renovate it, but I couldn't really justify renovating it without getting a rent increase. And so they were living in a situation that frankly was untenable for them and for me. Yeah. And it didn't make good sense, and so I turned it over to Brian and let him deal with it. Mm-hmm. Which is what you should do if you have a property in Chattanooga. You should turn it over to First Property Management and let them deal with it.
We appreciate the plug.
Hey, no problem.
Yeah.
I'll be looking for my check.
Yes. And it's in the mail.
Or you're
already in your bank account, frankly.
Yeah.
So the thing about it is, there's a couple facets to this, right? We're both investors. I happen to have a background in construction as well. And so, when you're evaluating a property, deciding you want to get into investment, be a landlord, etc., there's a couple things you need to sort of identify. And I don't necessarily want to take this in a direction that my opinion goes here. I mean, we all have choices that we make on a personal level, which, is also involves the financial side of it as well, right? So the first of it is you're buying something, you need to evaluate, like, how much work does this need, right? And as part of that process, you're going to identify what kind of improvements do you need to make on that. Right?
Yeah, and we did a whole episode about this, is sort of talking about the return on investment, but there's this other side to it that's outside of return on investment, which is, are you providing good quality housing at a reasonable price?
Yeah.
And that's really what you're talking about. Like when you look at a property, like, and we bought a multifamily property, or well, really we bought 2 multifamily properties earlier this year that, frankly, I don't think I would feel comfortable if anyone I knew lived in any of the units at the time that we bought them. And that's a sad state of affairs. There were literally more than a dozen people living in multiple properties, right? That the properties were just so poorly maintained that it was absurd. Now, their rents were really low. And so you can say on one hand, well, they're renting for $400. Like, they should be happy they're getting such a cheap place, right?
But there's a trade-off.
Yeah, there's a big trade-off, and that is that there's mold growing in their bathroom and that there's active water leaks in their apartment, right? Like, that's not a reasonable trade-off. It's not fair to the person that lives there, and frankly, it's just not a good use of resources.
No, it's not. And so, when you're looking at these things, a lot of people have a tendency to want to save on cost. And we understand that. Controlling expenses in real estate investing is certainly an important part of the equation. However, I would argue, and I think there's a lot of other people that take a similar stance, that it's probably the wrong, if you're going to focus in one or the other, it's probably wrong to focus on that versus on income.
Yeah, I mean,
potential.
look, especially when you're talking about multifamily, like these particular properties, net operating income matters, and we've done videos about that in the past. So obviously, if you can control your costs, you can increase your net operating income. But there's another side of that variable, and that is if you can increase your income, you also increase your net operating income. And frankly, in a lot of cases, by putting a little bit of money into the property, you can increase your income greater than you can in this situation of controlling costs.
I mean, as we touched on earlier, we have, as landlords, and I believe this to be true, a moral and ethical responsibility to provide safe, clean housing. Now, safe, granted, there's a fair housing thing there. I mean, when I say safe, I'm not talking about like the high crime or anything like that. Safe means the standards inside the property itself, right? Like running water, no leaks, things of that nature.
You need to provide property that meets a reasonable standard of safety, right? I mean, whatever that is, and it depends. If your property's in Michigan,
functional windows, doors, smoke detectors,
screens, smoke detectors, windows, doors. Ingress and egress, the basic safety measures to make sure that it's a safe place to live. But it goes beyond just basic safety. It also goes down to, like, do you want to provide a quality place to live or not? Because, a place can be safe, but it could also be ugly and dirty and not great, right? Yeah. And there's something to be said about, hey, you know what? Clean that property up, put some new carpet in or put new floors in, all that kind of stuff, because not only will you get a better quality tenant and more rent potentially, you're also providing housing that's just objectively better for your tenants.
Right. Which is going to save you a lot more money in the long run, right? Both on resale price down the line,
yes,
etc.
And like you said, though, it's not even really about the money. It's about the moral obligation as a landlord. Like, there are certain laws that you have to comply with regarding safety, but it doesn't really matter. If there wasn't a law that said I had to provide running water for my tenants, I would still provide running water for my tenants. It's just basic common sense.
Well, and I think that's the question that we all need to look at individually and say, is this a place I would be comfortable living in myself? Now, granted, in this station in life, neither of us may want to live in an apartment.
I mean, you kind of do. Like, this is basically an apartment that we're in now.
Fair enough. But it's also not a rental.
No, but the real thing here is, though, I have a standard for my own properties, and that is I will not invest in a market or an area or a neighborhood where I would not be comfortable personally living. Now, ironically, my standard isn't that I would be comfortable with my wife living there. That's sort of where I draw the line. Like, I have a higher standard for my wife than I do for myself. But the point is, you have to think about, as part of your real estate investing, as part of your landlording, how are you going to provide a place that's both safe, affordable, and also, just plain comfortable for your residents.
Yeah, and it has to work for you too. I mean, this is not just one side of an equation.
Right. I mean, you can't. I mean, like if I owned a very expensive house and I had someone who was a really nice person and they could only afford $1 a year, I mean, it wouldn't work because I got a mortgage payment to make, right?
Exactly.
Like, it has to be affordable for them, otherwise they're not going to rent it. But it also has to be like profitable, or at least cover your costage for you, or you're not going to be able to afford to provide
and now that
that
we've
house.
Sort of covered, improvements, etc. What do we want the shell, the improvements inside, floors, cabinets, paint, etc. to be? Sort of the second biggest part of this is maintenance, right? Because properties depreciate over time because people live in them. That means that, components start to break down, whether they be plumbing fixtures, appliances, heating and air units, etc. Right? And maintenance breaks down into several different categories. I mean, there's obviously your bigger ticket capital expense replacement things, but then there's also smaller things that, when go unaddressed, turn into larger problems over time.
The perfect example of that is like airflow filters.
Yeah.
Right? I'm guilty of this at my own house. I hardly remember to change them. And whenever I do, I'm like, well, that was dumb. I should have changed it a long time ago. I rented, when I first moved to Chattanooga, from a person who came every single month and changed the airflow filter for the HVAC system.
Yeah.
I think that might be a bit excessive.
That's probably a little overkill, yeah.
But the point is, like, you have to create a maintenance system to take care of not only your property, but also the residents that are living there.
Yeah.
Because cleaner air is important for the residents. Just like making sure that if your tenant calls you and says, I've got a leaky faucet, that you get there and fix it. It doesn't matter if you're paying the bill or they are, like, you need to fix it.
The landlord-resident relationship is very straightforward and very simple, right? As a landlord, we expect the rent to be paid on time, first of the month, right? Or within certainly the first couple days of the month, when they're still within the grace period. And then
tomorrow. It's got to be paid by tomorrow. It's the 4th today.
But then there's also maintenance, right? Like, you have people living in a property that you own. You're contractually obligated to maintain that property in instances where the damages have not been caused by the renter themselves, right?
Directly. Well, and frankly, even if they have, you still have a responsibility to maintain it. If their kid throws a baseball through the window, that doesn't mean you can be like, hey,
you got a
the window, sorry, your problem. You still got to fix it. But, now, it might be their responsibility to pay for that.
And when you think about it, look at it this way, right? Even something as minimal in our minds as a leaky faucet, right? Just a slow drip, that increases their water bill. And it may not actually bother them so much right out of the gate, but over time they're going to go, I'm actually spending more money because this person doesn't want to come out and address this issue. So that means they're less likely to stay in your property longer, which means you're going to have a vacancy, and then you're going to have, for sure, higher expenses because you're going to have to, presumably, fix that unit up in order to get it re-rented again.
So I think the summary of what we're talking about today is that it is both morally and ethically appropriate and also makes good business sense to provide a safe, clean, affordably priced house to your residents. So with that, Brian, do you have anything else you'd like to share?
I think we're good.
One thing I would like to remind everyone, unrelated to that, is check out this commercial. And now a word from our sponsors. Who's sponsoring us today, Brian?
Well, we are, Jeff.
We are. How amazing. So we want to tell you about how you can save an enormous amount of money on your taxes and how Brian and I have been able to eliminate our taxes entirely.
You guys need to learn about cost segregation, which you can do by going to our website, oldfashionedtaxsavings.com.
Yes, and if you go there and you fill out the form, you can get a free, no-cost benefit analysis that will show you how much money you can save and what it will take to do that. That was a fascinating commercial, Brian.
We'll see you later.
Cheers.
Cheers.